Financial Statement Analysis. Financial statement analysis in CFA Level 1 focuses on evaluating a company's financial performance, financial position, and cash flow generation through the interpretation of financial reports. The curriculum introduces the financial statement analysis framework, including the use of income statements, balance sheets, cash flow statements, notes to financial statements, regulatory filings, and management commentary. Candidates learn how analysts gather and interpret financial information to support investment decisions and valuation assessments. The topic emphasizes the importance of accounting standards, disclosure quality, and transparency in financial reporting. Understanding financial statements enables investment professionals to evaluate profitability, liquidity, solvency, and operational efficiency. Financial statement analysis serves as a core foundation for equity analysis, credit analysis, corporate valuation, and portfolio management activities. A significant portion of the curriculum focuses on analyzing income statements and understanding how accounting choices affect reported earnings and financial performance. Candidates study revenue recognition principles, expense recognition methods, non-recurring items, discontinued operations, and changes in accounting policies. The curriculum explains how management decisions regarding capitalization, depreciation, and expense timing influence profitability measures and financial ratios. Candidates also learn how earnings per share are calculated for simple and complex capital structures, including diluted earnings per share. Common-size income statements and ratio analysis are used to evaluate trends in profitability and operational efficiency. Understanding income statement analysis helps investment professionals assess earnings quality, identify aggressive accounting practices, and evaluate the sustainability of corporate financial performance over time. Balance sheet analysis is another important area within financial statement analysis because it helps candidates evaluate a company's financial strength and capital structure. The curriculum explains the accounting treatment and disclosure requirements for intangible assets, goodwill, financial instruments, and non-current liabilities. Candidates learn how to interpret common-size balance sheets and calculate ratios related to liquidity, leverage, and asset efficiency. The curriculum emphasizes the importance of understanding how accounting estimates and valuation methods affect reported asset and liability values. Candidates also study how long-term assets such as property, plant, equipment, and intangible assets are impaired, derecognized, and analyzed for investment purposes. These analytical skills help professionals evaluate solvency, operational stability, and the quality of a company's financial position and resource management. Cash flow analysis is essential because cash generation ultimately determines a company's financial flexibility and long-term sustainability. Candidates study the preparation and interpretation of cash flow statements under both IFRS and US GAAP standards. The curriculum explains direct and indirect reporting methods and demonstrates how cash flows connect to income statement and balance sheet accounts. Candidates learn to calculate and interpret free cash flow to the firm, free cash flow to equity, and cash flow-based performance ratios. Understanding operating, investing, and financing cash flows allows analysts to assess liquidity, earnings quality, and financing capacity more effectively. Strong cash flow analysis helps investment professionals identify companies with sustainable operating performance, prudent capital allocation practices, and sufficient liquidity to support future business growth and obligations. The curriculum also examines inventories, long-term liabilities, leases, pensions, stock compensation, and income taxes because these areas significantly affect financial reporting and valuation outcomes. Candidates learn how different inventory valuation methods influence profitability and balance sheet values during inflationary or deflationary environments. The curriculum explains deferred tax assets and liabilities, effective tax rates, and temporary versus permanent accounting differences. Candidates also study lease accounting, pension obligations, and share-based compensation to understand their impact on leverage, earnings, and financial risk. These topics improve analytical accuracy by helping investment professionals adjust reported financial results for comparability and economic substance. Mastering these complex accounting areas strengthens the ability to identify hidden risks, evaluate management decisions, and interpret financial disclosures comprehensively. Financial reporting quality and financial analysis techniques represent the concluding and highly practical components of financial statement analysis. Candidates study how conservative and aggressive accounting choices influence reported results and learn to identify warning signs of earnings manipulation or fraudulent reporting. The curriculum explains tools such as ratio analysis, DuPont analysis, forecasting models, and financial modeling techniques used in professional investment analysis. Candidates also learn how behavioral biases and competitive industry conditions influence analyst forecasts and valuation assumptions. Understanding financial reporting quality enables investment professionals to distinguish between sustainable and misleading financial performance. Financial statement analysis therefore equips candidates with the critical analytical skills necessary to interpret financial information objectively, assess corporate value accurately, and make informed investment recommendations in complex financial markets.